Hey everyone, it's Mark Ferguson with Invest for More, and welcome to our 1031 exchange calculator. I'm going to go through the calculator real quick and show you how to use it, and then I'm going to go through it again in more detail on how 1031s work because they can be very complicated. So, of course, make sure you talk to an accountant or attorney for specific advice on 1031 exchanges on specific numbers because this is just a rough idea, not exact. I also have a very in-depth article on 1031s linked to above, so check that out if you want more information. Okay, so here's the calculator, and it's very simple. Basically, you put in your ordinary income tax, whatever tax bracket you're taxed at. Then you put in your capital gains rate. This is usually 15 or 20% based on your tax bracket. You can look that up to see where you fit in. And then you enter information on your current property, the one you are selling to exchange into a new property. So you simply put your purchase price. This is one of my first rental properties I bought in 2010 that I'm exchanging into a new commercial property. So I bought it for $96,000. You put the current value minus any closing costs. So this is basically it's worth $275, but we have some closing costs, commissions we have to pay, and that's the net we're getting after selling it. And then your cost basis. So this is how much the property has depreciated over time, how many tax deductions you've taken each year, and I'll explain that later, but this is different from your purchase price. Then you put in the new property, so the one you're buying, and you put in how many properties you're buying, because that affects the cost of your exchange, and the total value of that property. So I'm buying one property worth $600,000, so I put that in there. And then your exchange fees. These are the fees I pay, $700 for basically selling one property and then $500 for the one I'm buying. These could vary greatly depending on what kind of properties you're buying, where you are, the company you use, but that's what I pay currently. And then it spits out the numbers. So the cost of the exchange, that's the fees you pay to complete the exchange, and the taxes you would pay without doing exchange. So if you just sold the property without doing any exchange, you'd pay $43,000 in taxes, and you'd save basically $42,000 once you deduct the fees you're paying to the 1031 exchange company. All right, so that's the basics. We have more calculators on the site, the cash flow calculator, cash on cash calculator, house flipping calculator if you want to check those out. But I'm going to talk some more about how these numbers are figured if you're interested in more in-depth information. Now, it can get confusing because 1031s have a lot going on. But first we'll start with the purchase price. We put this in the total amount, but when you're figuring your tax depreciation, it's basically one every 27 and a half years. Well, your house is depreciated over 27 and a half years. So each year, you can take 127 and a half. You come up with 0.036% times the value of the structure of the property. So even though I bought this property for $96,000, what your cost basis is based off of is the structure when you're depreciating it. So basically the IRS says the structure of your property will fall down in 27 and a half years and be worth nothing. So that's what you can deduct 127 and a half per year from the structure of that building off your taxes. So if we take this number and we say my structure was worth $70,000, we multiply this by 70, we get $2,500 a year that you can deduct from your taxes. And then you would save, that times whatever your tax bracket is basically. But what happens is you have to recapture this depreciation when you sell. So it's not just free tax money. If I were to sell this property without doing a 1031 exchange, and I held this property for 9 years, so each year I deducted $2,500 or so, total almost $23,000 I deducted over the last 9 years. I have to pay this money back, basically the taxes I saved back. It's a different rate than my income, but it's not just free money. Now, if we do the 1031 exchange, I don't have to pay taxes on that money. That's the huge benefit of doing a 1031. but it reduces our cost basis here. That's where that number comes from. It's basically your purchase price minus the money you've saved over the years from depreciating the property. And it also can get complicated too, because if you make improvements to the property, that might add to your cost basis. So if you spent $10,000 on an addition or a brand new deck, that could increase your cost basis. That's why you always talk to an accountant to make sure you have your numbers right and everything figured out right. If it's repairs, it might not increase your cost basis. It might be a straight deduction. Again, talk all about all this in the article as well, where it might be a little easier to understand than hearing me talk. So that number can vary a little bit. So this is just really, like I said, a basic idea of what you're saving. And then, again, we're selling this house for $275,000, but we're paying a real estate commission, title insurance, maybe you're paying closing costs. All those costs would come off what you're actually selling the property for. So this number should be the value minus those costs. And we'll add a little note in there too, so it's easier to understand. So that's how you come up with this part. That's the complicated part. Again, the number of properties matters, because if you have 5 properties, you're paying this fee 5 times. So it would increase your costs quite a bit. And it matters how much you're paying for the new properties, because when you do a 1031 exchange, the new property has to be worth at least as much as the one you're selling it for, or you'll pay taxes on some of the money you're getting back. Also, all of this money you're getting back has to go into the new property. You can't keep some of it. It's all got to be used for down payment, buying the new property. So that's something to consider as well with an exchange. And then coming back down here, we talked about the costs. Now there's something called a 1031 reverse exchange. And that is when you buy a new property and then sell the property after you buy the new one. So in that case, you can do this, but it might add $4,000 to $5,000 in costs for the 1031 exchange company to hold the money, to hold the property that you're exchanging in a reverse exchange. So if you're doing a reverse exchange, research the cost, talk to companies to see how much that will cost you, because it can be very, very expensive. Then all of a sudden you're adding, $4,000 to $5,000 to this number, which reduces your savings quite a bit. All right, so that's the more in-depth explanation. Hope it makes sense. Again, more information on our article if you need to get that in-depth ideas of how it works, or just talk to your accountant, which is the best idea to see exactly what you'll owe. All right, thanks for watching, and hope you enjoyed it.